I think I might have just found the next big trending stock, and the best part is, it's still incredibly cheap. I'm talking about Taboola, stock ticker TBLA. This is an ad tech company that might just be the value play we've all been looking for. Right now, it's trading at around $3.50, with a market cap of about $1 billion. So what exactly is Taboola? You've definitely seen their work. Ever been reading a news article online, and you scroll down to the bottom and see that grid of links with headlines like content you may like? That's Taboola. They power those recommendation engines on tons of major websites. Now, the stock has taken a pretty decent hit this year, down about 20%. But if you look under the hood, the company's financial engine is seriously starting to rev up. Let's dive into the bull case, because it's pretty compelling. Taboola absolutely crushed its latest earnings report. I mean, they didn't just beat expectations, they blew them out of the water. They posted a 15% year-over-year revenue increase, bringing in $497 million. And their earnings per share, or EPS, beat the estimates by over 50%. That's a huge beat. What's driving this incredible growth? It's a new AI-powered performance platform they launched called Realize. This thing is clearly working wonders for them. But here's what really gets me excited. The management team is showing extreme confidence in the company's future. They recently authorized and executed a massive share buyback, purchasing 14% of their own outstanding shares. Let me repeat that, 14%. That is a huge signal. When a company's own insiders buy back that much of their stock, it's like they're shouting from the rooftops that they believe the shares are deeply undervalued. They are putting their money where their mouth is, and that speaks volumes. It tells me they see a bright future that the rest of the market is currently missing. Of course, we have to be balanced and look at the bear case too. No investment is without risk. The main headwind for Taboola is that the market has been pretty harsh on digital advertising platforms lately. This is due to some broader shifts and uncertainties in the media industry, and Taboola has been caught in that downdraft. Also, if you look at its price to earnings or PV ratio, it's hovering around 43. For a company that operates on razor-thin operating margins, that number can seem a little rich to some investors. It suggests that a lot of future growth is already priced in, which can make a stock vulnerable if it doesn't meet those high expectations. So, what's the final verdict? Well, Wall Street analysts seem to be siding with the bulls on this one. The general consensus rating for Taboola is a moderate buy. The average price target from these analysts is around $4.75. Based on its current price, that represents a potential upside of roughly 35%. That's a very healthy potential return. When you put it all together, Taboola looks like a cash-generating machine that the market is temporarily ignoring. You have stellar earnings, massive insider confidence shown through buybacks, and significant upside potential according to the experts. The risks are there, sure, but the reward could be substantial. This feels like one of those classic cases where a solid company gets unfairly punished by broader market sentiment, creating a fantastic buying opportunity for those willing to look a little deeper. This is definitely one to add to your watch list. As always, do your own research before making any investment decisions. Thanks for watching, and if you found this breakdown helpful, be sure to hit that like button and subscribe for more deep dives into the market. See you next time.